Hello, it's Robert Miner with Dynamic Traders Group with our Saturday, March 2nd DT Reports video update specifically for our YouTube subscribers. This video, of course, is a abbreviated version of the more comprehensive and detailed video we do for our DT Report subscribers, but there's enough here that you're going to learn something and at least be alerted to a couple of potential trades, immediate trades, early this coming week. So what you learn here also you can apply to any market, any time frame. So it's not only for the markets we talk about, but it's educational as well on how we approach trade strategies for other markets. Also hang in there because before we're done, I'm going to give you a link to a much longer video if you're interested in trading or position, short-term or position trading for gold, silver, or the mining stocks. I did a special video on that for subscribers, and I'm going to make it available to everyone this week. Not something I usually do. Just as a reminder, everything I'm teaching you is oriented towards practical trade strategies, not forecasting, not academics to get into big discussions on what the wave count may be or the fib or that fib retracement is. I use this information as I have for well over 30 years to make practical trade decisions. I'm just showing you this. It's right off of the Robbins World Cup Championship site. You can see it for yourself. As in the last year, I did first place in the 6-month interest rate and index futures trading with a little over 86% return. I was third place in the Forex trading with a 70.4% return. And that was trading the euro only. I don't trade the cross rates. I just trade the euro. And then up through the end of January, anyway, I'm hanging in there just slightly with the Forex trading on the contests that they have. Next week they'll have that updated. It's not improved much in this past month. I've been pretty busy, haven't traded much, but we'll see if we can get some improvement in the weeks and months ahead. So practical. It's not just identifying the probabilities of where a market's going to go. It's, well, how do you trade it? Where's the trigger? Where exactly do you enter? Where do you put your stop? How do you manage the trade as it moves on? That's what we teach all of our people. And I hope you learn some of that in these YouTube videos. So let's get started and take a look at a special situation. Well, the first market we're going to look at quickly is crude because someone, one of our YouTube subscribers, asked about crude. So let's take a look at it. This is the weekly chart of crude right up through the end of last week. And more than likely, 2 weeks ago, we made what we call wave 1 or A high. In other words, that's the first section up. We're going to have what we call wave 2 or B correction, and then crude is going to continue to advance at least one more section up to well above the February high. More than likely, that's what's going to happen anyway. So where are we at technically? As of the end of last week, we had what we call a two-close reversal, and that is in old terms, I think W.D. Gann used it. It's called a snapback reversal, but we ended up closing below the closes, the weekly closes of the last 2 weeks. That's a pretty strong reversal signal. The weekly momentums are what we call dual look back overbought, and also what's known as a bearish price a momentum price bearish divergence. So more than likely we've completed that weekly high and will be sideways to down for at least 2 to 3 weeks, if not more. That's usually what follows a momentum bear reversals. We have really 3 to 5 weeks in the opposite direction. So we've got at least 1 week off the top so far. And here's just you can use this for any market, any time frame. These are just kind of typical standards that we always look at if we think an impulsive section is complete. And the correction to that should be typically anyway is at least a 38.2% time retracement. And if we do a 38.2% time retracement of this, what I got labeled a wave 1 or advance, that's March, week ending March 15th. So it's 2 weeks. So we would anticipate that a corrective decline would not be complete prior to the week ending March 15th. Now, it could go on longer, could go on much longer, but that would be a minimum expectation. So we can use that information for trade strategies that if if the technical position indicates that more than likely the crude's going to be sideways to down for 2 weeks, what side do you want to trade? Well, you want to trade the short side. You have to identify what could void that, and certainly just a trade above this past week's high would void this as the probable wave 1 or a high. So that's your stop out point for this bearish outlook. But right now it should be oriented to the short side, and usually a correction to an impulsive 5 wave advance, in this case a wave 1 or A, reaches at least the 50% price retracement. So, and that's at 51.28. So, got $5 plus probably on the downside, probably sideways to down at least for the next 2 weeks. And of course, both of those could extend further on the downside and longer as well. But that's a good piece of information to have, because then you can make a specific trade decision based on that. Here's crude daily. And more than likely, again, we've completed that weekly high. However, as of the end of the week, is the daily momentum is bullish. So we're probably within a couple of days of completing a daily low. Then the market will be sideways up for a few days. But because we're so near the high, it's an immediate position to consider short trades. And really, with this outside day, this is an outside to close reversal day on Friday, an immediate short trade with a stop above Friday's high. Stop doesn't need to be any further than that, because if it takes out that high, then something else is going on other than this wave 1 or a high. So great setup. The ideal setup is to wait for a few more days until the next daily momentum, a bear reversal. It'll be in sync with the bearish weekly momentum to continue what I believe will be a wave 1 or a corrective decline that will reach around the 50% retracement, which is right around these swing lows. Just a natural point of support as well. And on the daily, this is the 38% time retracement. That's March 18th. And of course, most of you know what else is going to fall in that during that week. Well, we got a FOMC meeting announcement. That's pretty important announcement for most of the financial markets, not directly for the crude market, but we certainly want to be aware of it. And then it's the spring equinox as well. Don't ask me why. Always be aware around equinoxes and solstices for potential reversals if a market's at some technical extreme. And of course, it's the fall equinox, September 21st, which has the highest probability of reversal. So that's where we're at with crude. Great setup's going to be in the days ahead when we finish a corrective decline followed by a continuation of the bull trend. But for right now, you want to be oriented to the short side as long as no trade above Fridays. Just a few words about the euro, and of course, everything I say about the euro. The dollar, it's just the inverse for the dollar. And then I'm going to give you a link for a comprehensive video on the position trade strategies for the gold, silver, and the GDX. But here's the euro. The euro made a bull reversal, weekly momentum bull reversal last week. It's traded well into the range of what I got labeled a wave A. More than likely, this is a completed A, B, C. That piece of information itself is valuable because if it's a completed correction, what follows a correction? A continuation of the prior trend, usually to a new extreme. So potentially quite a bit on the upside, both in time and price, indicated by just the position of the weekly data. Technical position. Here's the daily data, and we've come right up to the 62% retracement. There are some other key price levels in there we had in our reports over the last week or so, but they all hovered around the 62% retracement. And then on Thursday, we made a daily momentum dual look back bearish reversal to complete a probable 5-wave wave 1 or a high. So in Elliott wave terms, this is just a temporary high. We should have a corrective decline over the next few days, and that'd be a wave 2 or B corrective decline. Ideally, reaches around 62% retracement. They happen to surround the wave 4 low, typical target for a correction to 5-wave trend. And time-wise, between Tuesday and Friday. That's a 38 to 62% time retracement of what I got labeled a wave 1 array. So ideally and typically we can say is that a corrective decline would not be finished before Tuesday the 5th and would be finished by Friday the 8th. So yeah, it's kind of a wide range, fairly wide range period for a daily low, but we'll watch our daily momentum indicators, and if we get a bull reversal and those momentum indicators, particularly as long as price is above the 78.6% retracement, that would be the ideal setup to complete a corrective decline followed by continuation of the bull trend. Just the opposite with the dollar. It's probably going to have a corrective rally over the next few days, and then before the end of the week, it'll complete that corrective rally and continue to new lows. Of course, everything's probabilities. That's just the technical position, but I can develop a specific trade strategy based on that information, both for the information we had with crude and the information we had with this. A specific low capital exposure, high probability trade strategy. And of course, that's what it's all about. Okay, let me give you the link if you're interested in gold, silver, or the XAU. So if you're interested in gold, silver, or the GDX or mining stocks, go to dynamictraders.com/traders-resources. And that's where we have, I just posted yesterday, last night, about a 20-minute video, a real comprehensive analysis of these markets and immediate trade strategies. So even if you don't actively trade these markets, take a look at that video. It'll be very educational because it'll show you how we look at the whole process, not only of understanding the position of a market, a probable trade setup, but then how we develop a very specific trade strategy that may or may not get elected. But at least we have in advance, we've developed a specific trade strategy that will trigger us into a trade if those conditions are met. So check that out. Check me out at Twitter if you'd like to. I just post about one chart a day with some comments, but I can update some of these things that you learn about on our weekly YouTube video during the week. And of course, consider a subscription to our DT reports at dynamictraders.com. Have a fantastic week. Be back with you next week. Take care.